Welcome back to the Symposium interview series. Today I'm speaking with Dan Denning. He's the editor of the Daily Reckoning Australia. The Daily Reckoning is a daily contrarian e-letter covering the stock market. He's also one of our keynote speakers at the Gold Investment Symposium taking place this week in Sydney. And Dan will be talking to us on Thursday, the 17th of October. And your title, Dan, quite an interesting title, The Terror and the Depression. Wow. Tell us a little bit about what you're going to be talking about and telling people about next week.
Actually, I didn't realize that's the perfect day for me to be giving that
That's,
remark. So,
yeah,
and thanks for the introduction. As everyone knows now, that's the date that the Treasury Department has imposed on the U.S. Congress for raising the $16.7 trillion debt ceiling for the U.S. And what we're told by everybody is that if that doesn't happen, it'll be like 2007 times, 100, that it's another financial calamity. And I think for the gold symposium, that date's important because if you had so much negative news and so much bearish news about the US government and its fiscal situation, why isn't the gold price going higher? A lot of
yeah,
people are asking that question. And I think my remark, the reason I called it the terror and the depression, is the point I'm trying to make is this is a historical event as much as it is an investment event. And if you go back to the French Revolution and the American Depression, you have similar events where you were seeing the end of a fiat money regime. That's actually something Ron Paul said in his remarks recently. He said, this is a 35-year experiment in global fiat money, and it won't end well. So there's the short-term picture for investors, which is shares and bullion, but the long-term picture is about the monetary system. And I think that's what I want to talk about on the day the world ends, October 17th.
yeah, the day the world ends. But can we just go back and say why has this US shut down? I would have thought that would have been quite bullish for gold, but it's been the opposite. Why is that?
Well, I think there's two ways. The way I look at it is there's two issues in the US that have become one issue. The one issue, the first issue was the funding of the government and the passing of a budget. And that was the issue that should have been resolved at the beginning of October, but wasn't. But it was quickly morphed into raising the debt ceiling. Uh, and that, of course, doesn't happen until the 17th. But uh, if you look at it, you're right. If you look at it, you'd say this shows everybody quite clearly that the United States can't pay its bills, that
Absolutely.
it's in a long-term fiscal situation that shows that it's not going to be able to recover. So why isn't that bullish for gold? Well, last year when I came to your event, Kerry, what I mentioned is that in a financial crisis in fiat money, it can be either inflationary or
Yeah.
deflationary. And if it's deflationary, because credit isn't expanding, and that's what you get when you don't raise the debt ceiling. You can't use those treasuries as collateral for loans. Then the effect is deflationary, that money comes out of the financial markets. And I think that's the important thing for gold investors is that the gold price is being controlled by financial markets right now.
Absolutely. Yep.
It's not a function of physical demand because we know that's strong. We know that's strong at the retail level with coin collectors and bullion investors, and we know it's strong in India and China. The numbers tell us that. So the price action is deflationary, but that's being controlled by speculators. Now, what I'll say in my remarks is that if you own bullion, that should not worry you because it means that gold's becoming even more important in the financial system. For investors in mining companies where the price action determines what's going on with the shares and their cash flow, it's an absolutely critical issue because then you have to discuss who's going to survive if the gold price goes lower and who's not going to survive if the gold price goes lower. So that's the investment side of it.
Thanks for that, Dan. I mean, I think from my point of view, I mean, I'm just an ordinary everyday investor myself. Yes, I've got a little bit of gold bullion and a couple of silver coins, but I also invest in the share market. And just recently I was looking at the Bitcoin market. We've got physical gold, we've got the share market, we've got that paper gold market, which is the ETFs, and now with the latest technology, we've also got the bitcoins. Goodness me, I wish I'd invested in bitcoins, but Who would have thought Bitcoins would have gone from sort of 5 cents to what is it, about $140 US at the moment? I mean, it is so volatile. I think everyone out there at the moment is scratching their heads and saying, well, look, I'll run to the safety of the banks where I get a bit of a dividend, or the telcos. What's your take on how do people survive in a world which is just incredibly contrarian and is not following the historical moves that we've known in the past?
Well, yeah, why don't you give me an easy question there? Um, Look, I think you mentioned Bitcoin, you mentioned the share market, you mentioned gold, and you mentioned bank deposits. And for most people, it's probably just two of the three. It's shares and bank deposits. And I think what we saw in starting in 2002, or really starting in 2000, is that there was a small group of people who identified the weakness with paper money and wanted something that preserved value, something that was real wealth or could preserve value. So that was the beginning of the gold bull market. And of course, it all picked up speed for 10 years. Now you have the people who are fully aware that there's a problem with the paper money system that we have. There's a problem with fractional reserve banking. I think Bitcoin is a technology solution to a money problem. And as a technology solution, it's based on some of the same principles that gold's based on, which is scarcity. That if you can't print them from a printing press, then their value can change in the market. And secondly, it takes work to find them. So you've got to devote processing power from your computer to mine them, unless you're going to trade them. So in some ways, it's also related to gold that it takes real labor to create that money. So my view is that if you look at what this Edward Snowden saga of the last 3 months, anything that's technology, in my view, can be corrupted, appropriated, or made illegal by the government. So Bitcoin as a solution to the problem of preserving your wealth is problematic for me for that reason. That if the NSA can hack in and force Apple and Google and Microsoft and Facebook and PayPal and everybody else to share their data, they'll just do what they did last week. The FBI closed down Silk Road, which
That's
is
right, I saw that. Yep.
the government will just make these technology solutions to money illegal. The reason gold has been a last resort for people who want to preserve purchasing power and store the value of their savings is you can put it in your pocket. You can put it in your backyard. You can put it in a safety deposit box. And while the world moves from one monetary system to another, you've got that. And then when you have to trade that in for something that you can go down to the store and buy groceries with, you can do that. But that's not the same really with Bitcoin. And frankly, after what happened in Cyprus, not to excite a bank panic, but if you didn't see what happened there and walk away realizing that your deposits are there for the taking if the government decides it wants them, then
Absolutely.
you weren't paying attention to what happened. That's the bail-in. The bail-in is you might think you're a shareholder, but we're going to define you as an unsecured creditor to the bank. And instead of asking the taxpayers to bail the bank out, your savings are going to do it. So when I look at those three solutions, and that excludes shares, which is a separate discussion, but when you look at savings, gold bullion, and technology from Bitcoin, gold to me still has all of the advantages it's had for thousands of years, more so than ever, really.
You spoke just then about the share market. Obviously, a lot of people listening to this invest in the share market. Warren Buffett's good old saying, be fearful when others are greedy and greedy when others are fearful. Clearly, the market is fearful at the moment. The gold prices, the gold mining stocks have been absolutely smashed. So, do you see if people are looking at investing in gold mining companies, is now the time?
Well, there's two parts to that decision, and we all make them. One is the rational part, and one is the emotional part. And the emotional part, that's where being a contrarian helps, because you have to set aside the absolute dread that you have and realize that if something is hated and everyone fears it, then you're probably going to be able to get a very good price on it. And so you have to pay attention to that stuff, and you have to go against all of your emotional instincts and be a contrarian. But you can't be stupid either. And I think that's where looking at cash flows and balance sheets and looking at, right now, if you're looking at gold companies, you got to look at what they're paying in terms of operating costs. You got to look at how much money's going out the door in terms of expenditures. And then you've got to look at how much debt they have and how much they have to repay. So what is the cash flow situation? And then based on that, how many of those companies remain cash flow positive if the gold price falls to 900 bucks? And if it falls below that and they don't, they've got more cash going out than coming in, how long before they burn through it? And if they're going to burn through it at a lower gold price, you know what they're going to do in the share market. They have to go back to shareholders and raise more money, which means dilution. They have to go back to the capital markets. So if you're a speculator or if you're an investor, that math isn't difficult to do. You do the math and say, if they're going to either, if their only option is to come back to me and ask for more money, I'll sell now and buy back later after the dilution. And you have to be cruel and realistic about that. I don't think you should be loyal to a company just because you like their prospects or you like the management. In this market, if they're being driven by the price and they don't have cash coming in, you've got to make a decision about when to cut your losses and when to come back in. But that varies on a case-to-case basis. So you've got to be rational and you've got to set aside the emotional part.
Yeah, I think setting aside the emotional part's the difficult one for a lot of people. But you mentioned in that chat just now a lower gold price. Are you, in saying that, are you looking at the fact that gold could potentially go a little lower, or do you think we're running along the bottom?
Oh, I think of course it could go lower. There's no rule that says it has to correct 50% from the high, but often you see in an asset that has a multi-year bull market, and remember gold had gone up for 11, 12 years in a row, a correction of 50% isn't unusual. And that happens over a year or several years. So for gold to do that, we would be looking in US dollar terms at something around 900 bucks. And 900 bucks would it would do two things. It would drive out a lot of punters from the market. So it would be an absolute mauling in the stocks. And two, it would put a lot of companies out of business. So you'd get a massive rationalization in the industry and some supply would come offline. That's the base from which the price could start to go back up. And I do believe it will go back up. I believe when you look at the fiscal situation in the US and you look at the size of the US debt and you look at the ECB and the global financial situation, it's all the long-term forecasts for a higher gold price are still valid, but it's the bottoming. The bull markets begin out of despair, and as bad as things are in the gold market, it's not there yet. There's still that one last move I think we could get before we start to see a rebound. And at the very least, I think investors in gold shares need to be prepared for that because where can you can lose 100% from wherever you are right now, even if you're already down 50%, 40%, wherever you're at. So for me, I do a little bit of worst case scenario planning, but yeah, I do believe it's possible. And then wrote that earlier this week that you could look at 900 bucks or something.
Awesome.
Well, yeah, that's not good news for people who think we might be at the bottom. But my philosophy on that as a bullion buyer is to accumulate on the way down. That y y these aren't scientific predictions. You can't be sure when the market's going to turn or why. And we also know that if we are in a fiat money system crisis, then those those big moves up, those moments of crisis where you get sudden devaluation in currencies, those happen quickly as well. We don't know why or when, but we know that they can happen quickly. So to me, you take the guesswork out of the low or the turning point by just holding firm to that philosophy that you're saving in a different currency, and that currency is gold. And if you don't need that money in 5 years or 5 months, buy it and forget about it. Buy the bullion and forget about it. With the shares, it's a different deal. But with the bullion, for me, those are buying opportunities. And I've been, eating my own cooking on that. I've been accumulating, much to the chagrin of my family who looks at it. They call me every time the gold price goes down, or they send me an email and say, "What's going on?" Of course, they don't own gold, so they don't worry about it. But I'm not worried about it either. Um, so we'll see. Those are some of the things I'm going to talk about though, in because I know that those are the moments of anxiety when the most committed gold bulls throw in the towel. That's the bottom. That
Well,
has to.
let's not give away all of the secrets yet. Let's hear most of this next week, or actually, it's this week when you speak at the Gold Symposium. We're delighted you're one of our keynote speakers, Dan. You've always got a strong view on things, and you spoke last year. We love hearing from you, and I'm sure everyone coming this year, you're going to get a lot of questions again. So, Dan, thanks for taking the time to be with us today.
Thank you, Carrie. See you later.